Hey everybody, Economic Ninja here. I hope you're doing well. We're going to be talking today about Facebook and its epic drop today of over 20%. And we're going to talk about the FANG stocks, the implications for the stock market. We're going to figure out if the bulls or the bears are going to win in this one. Okay. Now, don't take any of this as financial advice, but I want to break it down to some just realistic logic. Okay. So there's a story out of the Hedge. I'm going to link it below, and it's entitled "The Stunned Wall Street Responds to Facebook's Record $200 billion Wipeout Today." It says Facebook, or Meta, now that it's in the witness protection program, is making a record. Is making record after dismal record this morning, after its catastrophic earnings and guidance last night. Not only is the company's 22% drop the biggest in history, but according to Bloomberg, the one-day crash ranks as the worst in stock market history. The Facebook crash has erased some $195 billion off of its market cap. That would make it the biggest collapse in market value for any US company. Now, what does this mean to the average investor? Well, let's first off break down what the FANG stocks are. You've probably heard this. If you haven't, I'm going to run over it really quick. What are the FANG stocks? And then it's an acronym. It's spelled FAANG. In finance, FANG is an acronym that refers to the stocks of 5 prominent American technology companies. One is Meta, or Facebook, because they wanted to rebrand because they're losing the battle. Amazon, Apple, Netflix, and Google, or Alphabet. This is a very big deal. To see Facebook wipe that much value off of its books because of guidance. And they're not the only ones that are having some serious struggles today, on the heels of PayPal having to wipe out tons and tons of fake bot accounts, where when you invest in these companies and you think there's something, really they're not. That's one thing. But to give you an idea of the magnitude, the sheer magnitude of what this is, okay? Right now, the stock market is built up, held up, propped up, in better terms, by a handful of stocks. Facebook being one of them, Tesla being another. The facts are the stock market right now is an illusion. All right. Now, this isn't trading advice. I'm not a financial advisor, not a financial professional, but the facts are, I think the bears are starting to pick up some steam here. And the old adage that a bull climbs up the stairs or climbs up a hill, but a bear, falls out a window. Well, I totally messed that one up. Put it in the comment section if you guys know it below. Is an understatement. The truth is, a stock market starts to rise incrementally during a bull run. But when the bears take over, fear takes over, and all of a sudden, gains that took months, sometimes years to accumulate, can be wiped out in the matter of days. And in this case, one day, to see that the 22% drop is the biggest in Facebook's history, but also the record market cap of 195 billion to be taken out is absolutely phenomenal. So the chart, and I want you guys to check out the story below. We're just going to go over a couple quick little things. I'm not going to go over the whole story, but there's a chart in here of Facebook, set for the biggest one-day drop, and it shows today Facebook's massive 195 billion, and then followed up by, Apple. To give you guys some perspective, Apple had 180 billion wiped out in one day, and that was in 2020. Microsoft lost 178 billion in one day. That was also in 2020, but in the spring when the big event happened, if you know what I mean, where everything was shut down. But then it's followed by Tesla having a 140 billion day, Amazon 130, and Facebook, obviously another day, had 121 billion wiped out of its market cap. Now, these are all tech stocks. And if history has proven anything, and that is from the massive NASDAQ run up of the late 90s, early 2000, is that tech is especially tech equities are very susceptible to massive drops based off of news. And the facts are, things do not seem to be getting any better in the markets right now, especially on the heels of the Federal Reserve raising their rates. So I wanted to bring you this because it's very important to watch what's going on. it's one thing to have a taper tantrum when the stock market is sort of puking because of, and sorry for the lack of better, explanation, but when they're freaking out and selling off because they know that the world cannot handle higher interest rates, right? And they know that's not going to bode well for the economy, the Main Street economy. That's one thing. But to see guidance or earnings misses or things like PayPal, where you see PayPal having to get rid of a ton of completely fake accounts, that shows investors, wait a minute, everything we've been investing may not actually be real. And we may be someday dealing with the next Enron. Only time's going to tell. But I believe that personally, and this is just my own personal feelings, is that we need to be very cautious in the markets right now. And remember, all of our pension funds are based off of the stock market and the stock market gains. And once the stock market starts to not make the average gains, the pensions start to hurt. So that being said, guys, I'm going to add this link in the section below the description. Check it out. Thanks to everybody that's been subscribing. Thank you to everyone that's been hitting the thumbs up and sharing these videos. With that being said, the Economic Ninja is out.